life above the 18,000 mark. After a very long time, we are looking at, in fact, after 25th of Jan onward, we were kind of facing a lot of trouble around the 18,000 mark. We were not crossing the 17,900, 18,000 so easily. So at least we are above the 18,000 mark now. You may say that some part of the gains are given away and we are trading slightly lower, but still 18,060 or thereabout. The sheer pessimism or the peak of pessimism appears to be behind us, be it peak of FI selling, be it peak of fear because of Adani Group stocks falling, banks also under pressure. All of that seem to have eased a lot for sure. Though earnings season is over, a lot of triggers for the market are also behind us. So what will market focus on from here on? Abhishek Basumallick is joining us from Kolkata to talk about markets. Abhishek, afternoon. So all these big triggers are behind us now. What are you monitoring very closely?
So good afternoon, Ajay. Great to speak to you again. Like you said, I mean, most of the news item, I mean, whether it was the MPC, US Fed meet, budget, earnings season, all of that is now pretty much over. So now I think most of us, we need to go back to our drawing boards, analyze the results, analyze the management commentaries, and see where the how each of these industries and companies that we all track, how they are sort of shaping up, and then take individual positions on the stocks that we like. So now is the time for more of the grunt work that we need to do from an analysis perspective, rather than watching for external cues from the market.
Okay. Abhishek, what are your thoughts on one part of the lending universe which is not very often talked about, and that is MFIs, microfinance institutions, especially after the kind of big budget, kind of dole out which has happened. There's a sense coming out, and in fact, India Ratings also put out a report that MFI universe could see 20 to 30% growth, annual growth going forward. They have, rebound very nicely. Collections are good, and loan inquiries are rising from the COVID lows, and they've absorbed that shock going forward. Have you looked at that space? Do you have any name there in your portfolio? Are you researching that space?
Yeah, I think MFIs is actually a very, very wonderful space right now, because if you see what is happening, there have been multiple factors playing out on the MFI space. There have been regulation changes over the last couple of years, and now with the new regulations coming in, where the spread that they actually had, now there will be higher NIMs that they can have. Uh, Also, balance sheet cleanup has happened significantly for most of the MFIs. And also, I think because during COVID, the financially weaker section got impacted the most, which is actually the customer basket for the MFIs that got impacted. So, now that we are coming out of COVID and things have normalized, I think the it actually looks very good from the MFI space. Just to add to that, if you look at what Bajaj Finance, which is probably one of the bellwether in this area, they are also sort of getting into MFIs, obviously because the space definitely looks interesting from a slightly medium to longer term perspective.
Okay. What about manufacturing? You must have observed the way performance and commentary of Cummins India, ABB, even Bosch for that matter, it appears that the kind of premium they command in their valuation is a bit justified. But nevertheless, that's an individual investor's call. What are your thoughts on the way this entire basket of specialized capital good companies reported their numbers and commentary?
Okay, so first disclosure, we are invested in a number of the stocks that you mentioned, and I've been very bullish on all of these for the last 1 year. And just to maybe take the discussion a little, maybe one level above, see what is happening other than capex manufacturing doing well is the additional impetus for some of these MNC manufacturing companies, because a large part of these MNCs used to outsource to their respective units in China and India. Now, because of whatever political equations situation in China, a lot of that is slowly but surely moving away from China. Whether some of it is going to Vietnam, Indonesia, Malaysia, but also a large part of it is coming to India. So for these MNC manufacturing companies, you are actually going to see a disproportionate amount of growth. One coming from the domestic market, and the second coming from exports to their parent.
Fair point. Have you looked at the bearing space? Schaeffler, NRB bearings. Schaeffler is coming out with results today and the stock has shot up very ahead of the numbers, but NRB bearings and some other Timken, etc. Do you like that space?
Yeah, absolutely love the space. Again, multiple triggers. Railways, huge trigger for some of these bearing companies. The number of rakes that we are sort of giving out orders for, very, very big trigger. The entire, pickup in capex, whether it is, new cement plants, or whether it is this entire transition economy, right, of, building up new, newer capacities, that is going to require a large amount of all engineering inputs. I think railways is one of the bigger, going to be plays for this, for the bearing space.
You also, in the same light, looked at some of these earth-moving companies, Action Construction, Sangvi Movers, because they say that they are also a variety of stocks which are directly beneficial of increased capex. Like they say that in the gold rush when it happened in US, it's the spade manufacturing company which benefited most. So
Yeah, the picks and shovels,
yeah,
yes.
picks and shovels. Yeah, exactly. So, do you think that same phenomena can play out here in Sangvi Movers and Action Construction?
Some of it will definitely, because if you look at the pickup in mining, you pick up that will play out through these companies. You need to take a sort of individual call based on the balance sheet strength of each of these companies and which specific area they are playing into. Action Construction. I mean, a lot of these companies, ACE, Sangvi, a lot of these companies, the good companies, long-term track record is there. So, it's basically a time. So, see, in a nutshell, next 2-3 years is going to be the time for engineering, capital goods, the entire capex play, right? I mean, you've seen railways, roadways. That's the place, where uh, the biggest traction is there.
Abhishek, you remember recently Mercedes-Benz India had made a comment that how SIPs are competing with the Mercedes sales. You remember that, and created quite a lot of kind of debate on internet and everybody. That what a point he made. But so today my colleague Anisha Jain spoke with the India head of Mercedes to understand the thought process. What he actually essentially said was that in India both will grow because just 4% out of all the $1 million households in India, just 4% of them have luxury cars in India. The same is about 60%. Any household with a net worth of $1 million in China has 60% of them have luxury cars. So coming back to you, there is a luxury car retailer also now listed in India. Barely $250, $300 million NM cap, landmark cars. Have you studied the business model there?
No, unfortunately, I haven't. But just to comment on the luxury car thing, I think, see, historically, if you look at from our childhood, we've had this as a country, we've had this aversion towards conspicuous consumption, right? We don't want to. So in general, it was not seen. It was not seen in good light to be very flashy with the money that you earned. I think what is happening is slowly that trend is changing. People, when they make when they're successful, this slowly starting and spending on themselves. So I think this trend is definitely going to get strengthened over the next few years, because there is this social element to it, right? I mean, if there are two people who earn the same and one person drives a Mercedes and the other doesn't, sooner rather than later, he will probably get peer pressured and family pressured into buying a luxury car.
Yeah, it does. It generally it works. You're right. But for value investors, we have to fight that urge, right? Value investors cannot fall in that trap of what the societal pressures are. So I'm sure you're talking about it, but you yourself stay away from that. Is it?
Absolutely.
Okay, tell us, Abhishek, what are you researching right now? What new ideas, new themes are you researching? Which at the right price you would look at including in your portfolio?
See, I think interesting is I've already spoken about engineering, cap goods, all of that. I think the pharma space and the IT space are where I think the sort of bottoms have been made, right? They've been earnings have probably come to a place where it will probably get better from here. Margins are going to improve. Growth is going to come back. So that is the space where maybe incremental amount of capital can go in from now on. So that's the space that I'm looking at a little bit closely.
All right, Abhishek, thanks very much for joining us. Always enjoy our conversations. That is Abhishek Basumallick talking about markets and how he's analyzing various parts of it. Take a short break.